Let me start with my guest, Johnson. And Johnson, when you look at how the market is playing, though, can you speak to the market sentiments we're seeing?
Thank you, Ken, for having me. What I think has happened in the market is that we saw a market that went on a steroid last week. We saw a market that on two occasions appreciated by more than 6%, and driven principally by a couple of factors. One is the discovery of a vaccine by Pfizer, and which led to a rally in oil prices. And second factor is that we saw the fixed income space where yield had dropped to below 1% for 364-day instruments. So investors had to switch their investment into equities. About this week, we've seen profit taking for the past 2 days, which was expected, because by the time before the profit taking set in, we've seen a market capitalization that has crossed the 18 trillion mark and 35,000 points. So it presented the opportunity for people to take some profit. So in any case, we are still witnessing a very positive market outlook on the equity space.
Yeah, the market is still very positive year to date. But let me bring in Seyi here. Seyi, looking at how the investors are continuing to take profit, though, how much longer do you think this is going to play out?
Okay, thank you very much, Ken. The general opinion is that as long as fixed income yields remain at rock bottom rates and equities continue to present a good, decent capital gain and equity and the good dividend returns, we expect the rally to continue, albeit at a very, very slow pace. Right, the fixed income yields on the average are around the treasury bills market yields at, let's say, 0%. Right, so for an investor looking at the opportunity to get the equities market still presents a very decent opportunity. So we've seen investors move like the fixed income market to do the equities market in search for yield. So as much as the liquidity in the markets we persist, we believe that this will persist till Q1 2021. We expect the rally in the equities market to persist.
All right, Johnson, looking at how things are playing out, though, yesterday we saw the NSE Industrial Goods Index down by 3.3%. Do you think we're going to be seeing that much more profit taking happen in that space today?
Yes, it's not impossible. If you look at the industrial goods segment, was among the greatest beneficiary of the market rally. We saw stocks like the Bua Cement, the Dangote Cement, Flammers. So they showed so much rally. I mean, if you look at the sectorial rallies in the past 1 month, they actually enjoyed one of the strongest rallies. It's not impossible that people are trying to lock in. People will still continue to take profit this week, because even at the current prices, they see both a lot of profit taking opportunity for those who enter the market a month or 2 months earlier. I think we could still see profit taking. But the good thing about that sector is that their performance has been very strong in terms of performance of reported companies in that sector. We saw the performance of Bua, which had its profit grow by about 24%. We saw Dangote Cement that grew profit in the third quarter by about 35%. And we saw Honeywell that grew profit by about 63% in the third quarter. So even if you're not taking profit from the stocks in that industry, in the industrial goods segment, you still have strong dividend yield opportunities in that segment.
All right, Seyi, but looking at also another sector that also witnessed a lot of decline yesterday, the consumer goods index was down about 3.2% as well. What's your take for stocks in that space?
Okay, generally, I think the general sentiment now is just profit taking. Equities have moved aggressively. I think the year-to-date performance is around 27% as at yesterday. So it's just the normal trend of market to cool off. But as I've said, we still expect strong demand. The fundamentals on those stocks are still very, very strong. And we expect demand to come subsequently on this segment of the equities market.
All right, Johnson, looking at the 9 month earnings we've seen so far, it's been quite mixed though, but would you say it's part of the sentiments driving the equity space?
Yes, to some extent, like I did mention earlier, the industrial goods segment that have shown strong performance in terms of profitability. We also seen good performance by the banking sector. I mean, we've seen the likes of Stanbic IBTC, the likes of GT Bank, Zenith Bank, Fidelity Bank, published very improved, some reasonably improved performance in the third quarter. So in effect, we've seen, apart from the industrial, the consumer goods segment that we've seen slowdown in profitability. But even at that, some sectors, some of the operators in that sector showed very good performance, but the brewery sector seemed to be the laggard, obviously because of the lockdown that we witnessed. But if you look at some operators like the flour mills, they reported good performance in the third quarter of this year. So I think that's one of the factors that drove the market to the bullish run we saw last week. Like I said earlier, we also still have a very strong market because the underlying businesses are still reporting good performance. Again, if you look at the dividend yield of most of the companies, you've seen dividend yield in the region of 10%. And when you compare that to the yield on fixed income space, it then means that for any descending investor, the appropriate segment to put your money is in the equity space.